What I'd like you to do now is this. Look at this completed worksheet, and now you're ready to start doing what's called closing entries. So we've already journalized the adjusting entries, and now we want to journalize today closing entries. So I want to take you through that process. Did you start that? Okay. Okay, so to start the closing entry process, what's the first thing I'm going to do in my general journal?
Right, closing entry.
Thank you. What am I going to use for the date? I know you can't see it there, but what does it say on your paper? Good. December 31st. Now, what's the first step of closing entries? Close out what from the income statement columns? Credit accounts except for income summary. So what credit accounts do you see there? Subscription revenue? Good. Subscription revenue, and what's the other one that's in the credit column? Sales of books. So we debit these two credit balance accounts in order to close them. So 59,000. And what's the other amount? 520,200. From the worksheet, correct?
I'm looking at a worksheet and I see a credit balance over there and subscription revenue of 122,000.
That's the capital.
Yeah, it's 59. Where's it right? Where's 59? Somebody just point at it. I have it.
Income statement, credit column.
Okay.
I thought I had the total wrong. Does everyone see it? What we're doing? Why we're doing? Okay. If these are being debited, what's going to be credited? Good. For how much? The total of those two, which equals, looks like 579,200. Okay? First step. 31st again. We've closed out credit balance accounts from income statement. Closed them into income summary. Now we're ready to close out debit balance accounts, correct? So, if we're going to close out debit balance accounts, we must credit those accounts. So what are we going to debit? Excellent. Do we know the amount yet? No. So we're going to list our credits now. So go ahead in the income statement and list all of the accounts in order from the worksheet except for income summary. Starting with purchases. You can pause it. Pause it. So what we've done is we've closed out all of the debit balance accounts shown on the worksheet in the debit column by crediting them. And then the total of all of those together gets debited to income summary. So what is that total of all of those? Anybody have it? I think it's this. $517,300. So all of them together equals this amount to income summary. Now, without looking, what is our next step in this closing process? We've closed out all credit balance. We've closed out all debit. We have to close out income summary. Let's take a look at it. What does it have in it besides this debit and this credit? Good. So what does it have before these closing entries? A debit of $90,000. Those were from adjusting merchandise inventory. And now we're going to add to it a credit of $579,200 and a debit of $517,300. So looking at all of this information, what is my balance left in income summary? Add up both sides and subtract. You are correct. These are reversed. Good note. Now try adding them and tell me what you get for a balance and which side it is on. What is the balance? It's going to have a credit of $64,750. Agree? If the balance in income summary is now $64,750, and our next step requires us to close that out, what would we do to income summary? Correct. So we're going to debit income summary for the balance in it, $64,750. Yeah. And I'll show you why once we get done, okay? So we're going to debit income summary for $64,750. And we're going to credit, what did you say, May? Yes. So the capital account is called J.A. Horwitz. If we're crediting capital, is capital going up or down? Up, which means we made money, correct? And what's the last step we're going to do? Close out withdrawals into capital, which means we need to debit capital to make it go down. How much, according to our worksheet? $15,000. And what's the credit go to? The withdrawal account to close it. For the same amount. Once we have done this whole closing process and journalized and then posted it, then our accounts are up to date. Now I'm going to go back to Anastasia's comment regarding it's the same amount on the worksheet. It should be, because that beginning and ending inventory that we didn't take into account there is part of that cost of goods sold part. So it's already included in the whole process. But we must show it on the worksheet. Otherwise, could you complete an income statement without that information? No. So that's why we extend both balances. And that is the only reason. Otherwise, your net income would not reflect that cost of goods sold part. So again, once you get down to closing out income summary, it should match the net income or loss amount that you show on your worksheet. If it doesn't, again, you've made a computation or something's been omitted, like I did rent expense. So again, what you figure there, once you journalize, should come out to the same amount that impacts capital. Okay? So you should be able to take a worksheet and do any financial statement just based on the information you see in that worksheet.